Gold's a much better store of value than a 10-year treasury. I mean, this is a trend that's been going on for some time, but I think it's really starting to accelerate. It really accelerated when the Gulf states started accepting non-dollar currencies for their oil. Oil is the largest commodity in the world. I mean, in terms of the size of the oil market, it's 20x the size of the gold market. So, if these people start storing their excess earnings in gold, that's going to be a lot of demand for gold. And so my belief is that, 2,400 is just jacks for openers. I mean, I'm always investing with a 1 to 5 year view, and I'm highly confident that within 1 year, gold will be over 2,400, approaching 3. And I'm pretty confident that in, 4 or 5 years, it's going to be 4,000, 5,000, 6,000, because the trends are just there and they're so powerful.
In early Asian trading hours on Monday, the gold price extended its upward trajectory, reaching around $2,360, driven by escalating geopolitical tensions in the Middle East. This surge in safe haven flows has benefited precious metals, including gold. LawrenceLepard of Equity Management Associates underscores the recent rally in gold as indicative of a shifting monetary landscape. He attributes this shift to concerns over the U.S. fiscal situation and potential dollar depreciation. Lepard also highlights the profitability of gold mining companies amidst rising gold prices and notes the increasing demand for gold among nation-states seeking alternatives to holding U.S. treasuries and dollar reserves. The skyrocketing prices of gold and silver have led investors to pivot towards them, prompting economists to forecast new price thresholds for these metals. Gold's accelerated surge, exacerbated by worsening global conflict and inflationary pressures, has further incentivized investors to seek refuge in alternative assets like gold and Bitcoin. Lepard predicts significant ongoing increases in gold prices, driven by trends and growing recognition of gold's superiority as a store of value. He foresees prices reaching $4,000 to $6,000 per ounce within 4 to 5 years. Renowned investor Jim Rogers echoes sentiments aligning with global market dynamics, advocating investors to pivot towards gold to derive future value and stabilize returns amid market volatility. Lepard attributes gold's rise to various factors, including individual investors' inflation concerns, geopolitical shifts, and changes in global trade dynamics, favoring non-dollar currencies for commodities like oil. This diverse demand from retail investors and nation-states echoes LawrenceLepard's positive outlook on gold's future performance. Join us as we delve into LawrenceLepard's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think gold is sniffing out the monetary debasement that's going to come. I mean, one thing it does is it makes the miners extraordinarily profitable. I mean, I had a lot of miners that frankly were doing just fine at 2,000. I mean, if your ASIC is 1,300 and you're selling your gold for 2,000, you got 700 in margin. That's respectable. That's very respectable. Obviously, if the gold price goes to 2,400 and you add another 400 onto the 700, wow, that's great. Now your ASIC's going up as well because there's inflation and all the inputs. It makes the gold mining business a whole lot better. The spreads get much, much wider. Marginal deposits become more economic. Good deposits, just throw off enormous cash. So it does all of that. In terms of, it sends a signal to the policymakers and to the holders of the dollar and others that, the dollar is not necessarily such a good store of value. I mean, we haven't really touched at all on the BRICS and the way that, the U.S. seizing those Russian assets and then giving them to Ukraine has really created what I think is an enormous monetary shift. And that is, what I call the process of de-dollarization. As you and everyone else knows, the dollar is and was the world's reserve currency and was really the basis of all trade. The petrodollar that Kissinger established way back when. And what you're seeing now is all these countries are realizing that their assets can be seized and that the U.S. fiscal condition is very, very bad. And so you're actually starting to see, major countries buying oil in non-dollar currencies. And you're seeing the Gulf states accept them. And then they accept, so China buys oil from the Gulf states and they pay with yuan, renminbi. And then of course the Gulf states think, well, if I need something, I'll go to China, and rather than buy those pumps from Halliburton in the United States, maybe there's a China pump maker that will sell them to me, and I'll just use the yuan to buy those. But if I have too much yuan, you know what? I can just easily swap it out for gold in the Shanghai Gold Exchange. It's another piece of the demand for gold and the reason why, gold is starting to perform so well is that, nation states, not just people. I mean, you and I might say, hey, there's inflation, we got to buy gold. And in the U.S. that's not happening. Actually, the U.S. GLD, the ownership's going down, but nation states are saying, hey, we used to hold treasury bonds and not worry about it. Hey, we used to hold dollar reserves and not worry about it. Well, two things. One, we've seen the treasury bonds starting to really not do well and jack out in price. Two, we've seen the U.S. fiscal situation get really bad. And three, we've seen the U.S. say, if we don't like what you do, we're going to grab your bonds. And I think those three things are very powerful catalysts for other countries to say, when I end up having a surplus on whatever it is I export, maybe I won't store it in dollars. I'll just, I'll either use it with whoever, whoever bought it from me, I'll go buy their goods. But if they don't have anything I want to buy, I'll just put it in gold. Gold's a much better store of value than a 10-year treasury. It really accelerated when the Gulf states started accepting non-dollar currencies for their oil. Because oil is the largest commodity in the world. I mean, in terms of the size of the oil market, it's 20x the size of the gold market. So, if these people start storing their excess earnings in gold, that's going to be a lot of demand for gold. And so my belief is that, 2,400 is just jacks for openers. I mean, as you and I were talking about before we got on the phone on this recording, could we check back to 2070? Absolutely. Kind of maybe even expect it. I think it would be an enormous gift if it happened. No guarantee it will happen, but it could. I don't care. I mean, I'm always investing with a 1 to 5 year view, and I'm highly confident that within 1 year, gold will be over 2,400, maybe even approaching 3. And I'm pretty confident that in 4 or 5 years, it's going to be 4,000, 5,000, 6,000. Because the trends are just there and they're so powerful. And I don't see anything that's going to reverse them.
Gold prices edged higher on Monday, buoyed by weak U.S. employment figures that increased expectations of a Federal Reserve interest rate cut. Despite the dollar's strength, gold broke out in April, surpassing $2,400. LawrenceLepard remarks that this breakout signifies a significant shift, marking uncharted territory for gold prices. The breakout reflects a multi-year trend from around 2011, when gold reached $1,900. Last week, several Federal Reserve officials adopted a hawkish stance. Atlanta Fed President Raphael Bostic indicated she did not anticipate interest rate cuts in 2024, citing elevated inflation levels in the first few months. Lepard notes the intriguing aspect of the breakout occurring despite initial expectations requiring a pivot from the Federal Reserve to drive gold's performance. While there were hints of a Fed pivot in the fall, it wasn't until earlier this year that gold decisively breached the $2,070 level. Let's get back to the interview.
The biggest thing that happened in the last 6 months that everyone watching this is probably aware of is that the gold price broke out of a top that had kind of been established in, call it roughly the $2,070 range. It shot up to that level on the COVID stimulus. And then it kind of, and that was in 2020. So now we're going on 4 years later, and we kind of bounced up against that 2070 a bunch of times, and then we trade back down, up and down. And we decisively broke out this year through that 2070 level and squirted up to 2,400. We're now back around 2,300. But that breakout is a very big deal. That's a breakout of a multi-year top, and actually a top that kind of goes back to 2011 when gold hit 1,900. It wasn't 2070, but it was very similar. So we're now in untested, new territory for the per ounce price of gold. And the reason I think it did that is that I think the gold market is very good at sniffing out monetary debasement and knowing what's coming. And it's funny, I think the last time we spoke, we thought, well, it's going to take a Fed pivot to get gold to really start to perform well because, they're trying to tighten the money supply, although not successfully, but they've certainly raised interest rates quite a bit, which has try and slow down activity in the economy. And what gold kind of said is, hey, you know what, we're not going to wait for that. We know what's coming. We're taking off. And there was a little bit of a Fed pivot in the fall in September, October, when the 10-year went through 5%. Very quickly, 10 or 15 Fed governors, and I talked about this in one of my quarterly letters, came out and said, oh, no, the rate hiking cycle is over. We'll soon be cutting. And so gold probably saw that, but that wasn't enough to shove it through the 2070, or it wasn't until earlier this year that it went through it. and a lot of reasons why it did go through. But I think again, it's sniffing out the future monetary debasement. I would say the other piece of data that we've gotten since that point in time is that China has been an enormous buyer of gold. And you've actually seen gold ETFs in the West, in both the US and the UK, losing investors over this time frame since you and I last spoke. And yet, foreign central banks in China in particular, they have been aggressive buyers of gold. And so that was enough to shove it up through the 2070. And the world is just starting to take notice. I mean, some people think, well, it's a fake breakout, but I don't. I think it's going much, much higher. I don't think, I mean, we've known for a long, long time that the government cooks the inflation statistics. I think they cook the employment statistics to make it suit their interest. And it's an election year. And so, despite the Supreme Court saying that, the student debt can't be forgiven, Biden's forgiving the student debt. So, they're gonna. I mean, they're spending money and everything. In the State of the Union, he announced some new programs to help home buyers. I mean, the Republicans rolled over. We just passed a $1.2 trillion spending bill in 48 hours. We just sent $95 billion to for foreign aid for Israel and the Ukraine. The Biden administration projected next year's spending would be $7.3 trillion, which is a 13% year-on-year increase. Now, that won't get passed, but the point is, 13% increase in spending year over year when we're already running a $2 billion debt. Washington is truly out of control. And I think that's a big part of the story that gold has sniffed out, right? That there's just no way, that these dollars I hold are money good in terms of purchasing power. I need to buy something the government can't print. And gold is a top candidate.
The recent movements in gold prices underscore the complex interplay between geopolitical tensions, economic indicators, and monetary policy. Gold has surged despite the dollar's strength, reflecting shifting investor sentiments and concerns over inflation and global instability. As we navigate these evolving dynamics, how do you envision gold's role in investment portfolios, and what factors do you believe will continue to shape its performance in the coming years? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.